Okay, let's dive in. Imagine this for a second. You're staring down the barrel of a fortune that most people can't even conceptualize.
Right.
We're talking $92 billion. That's as of May 2025.
That's just staggering.
It puts you firmly among the planet's richest, currently ranked number 18 globally, and undeniably the wealthiest person across all of Latin America.
Yeah.
With that kind of power, you could acquire anything, live anywhere imaginable, pretty much command instantaneous global attention.
The typical image that springs to mind is, yachts, private islands, maybe spaceships, that kind of thing.
Exactly. The symbols of hyperwealth we see played out in headlines and on social media,
Uh-huh.
and yet the figure at the center of this staggering fortune defies almost every one of those expectations.
It's a huge contrast.
This person still lives in the same relatively modest house they purchased back in 1982.
Since 1982.
Wow. Reportedly, they wear shirts from their own discount department store chain. They've been known to drive themselves.
No chauffeur.
Apparently not always, and they eat dinner frequently with their family at one of their own casual restaurant chains. And the same person just announced a massive forward-looking pledge, $10 billion, specifically earmarked for AI infrastructure.
Okay, the contrast is absolutely stark there. Billionaire next door meets tech visionary.
It's almost paradoxical, right? And that person is Carlos Slim, the subject of our deep dive today.
Mm-hmm.
We've pulled together a stack of sources, articles, reports, notes to really unpack his investing strategy and the philosophy that underpins this deeply unconventional life he leads, especially given his immense wealth.
And our mission isn't to simply tally up the billions. Like you said, that number almost becomes abstract anyway. The real value, the real insight here lies in understanding the system he used to build that wealth.
Precisely. The information in our sources paints a picture not of luck or flash, but of a fortune forged through relentless financial discipline, an exceptionally long-term strategic vision, and this almost legendary, unwavering commitment to living well below his means.
It's less about the outcome, the vast wealth, and more about the timeless principles embedded in the process.
Right, and those principles are surprisingly accessible. So, over the course of this deep dive, we're going to explore that process. We'll start by looking at his almost counterintuitive willingness to buy assets when everyone else is in a state of panic, essentially, turning crisis into opportunity.
Okay? And then we'll dig into the bedrock, the foundational financial discipline he began cultivating incredibly early in life.
Which naturally leads us to that striking frugality we touched on, not just a personal quirk, but a strategic advantage. We'll examine his approach as a kind of turnaround specialist for struggling companies.
And how he's built a resilient empire through strategic diversification, creating an ecosystem rather than just, a collection of assets.
We'll also explore his deliberate choice to avoid the spotlight, focusing on substance over fame, how he's actively preparing the next generation, not just to inherit wealth, but to be builders themselves.
Which is fascinating. And finally, we'll look at those recent, perhaps surprising forward-looking investments in areas like AI and 5G, and how even these fit into his long-standing pattern.
Yeah, the power in this deep dive, for you listening, is the chance to bypass the noise and the headlines and get right to the core, actionable lessons for building sustainable value in your own life, whatever that looks like.
Mhm.
Slim operates so far outside the typical billionaire narrative that his playbook offers genuinely surprising insights. Get ready for some aha moments, because his approach, while simple in principle, is profound in its application.
Okay, let's unpack this. The source material consistently points to a specific fundamental principle that seems to anchor everything Carlos Slim does, particularly in investing. It's a counterintuitive, profoundly long-term mindset.
Yes, this really feels like the starting point for understanding his entire approach. The sources are very explicit about his core rule. He buys when a business's intrinsic value is clear and substantial, but its market price is significantly depressed.
Right, not chasing the hype.
Exactly. He doesn't chase trends. He stays away from hype cycles, from asset bubbles, from whatever the next big thing is generating buzz, whether that's been crypto in recent years, the dot-com boom before that, or, earlier speculative manias.
So if something is super popular, maybe overly popular, experiencing a frenzy, he's probably looking elsewhere.
That seems to be the case. It's likely not on his radar for investment then.
What truly sets him apart, though, and what the sources really emphasize, is his remarkable willingness, maybe even eagerness, to invest during moments of widespread financial panic or crisis.
Yeah, while other investors understandably are paralyzed by fear or actively trying to liquidate assets to minimize losses, Slim is strategically deploying capital, thinking long term.
Mm-hmm. Looking for those opportunities.
The perfect illustration of this, detailed in the source material, is his activity during the 1980s Mexican financial crisis. This was a period of intense economic turmoil.
A really rough time.
We're talking hyperinflation, interest rates soaring to crippling levels, the peso collapsing in value, and a general sense of economic and political instability. Conditions that would cause most investors, both domestic and international, to flee the country and its markets as quickly as possible.
Absolutely. Run for the hills time.
And yet, Slim saw it as a period of unparalleled opportunity. He recognized that the panic was causing fundamentally sound businesses to be valued at a fraction of their true worth.
Okay, so the fear created the discount.
Precisely. He began acquiring undervalued companies, specifically targeting those that were being hit hardest by the crisis. His focus wasn't on their current distress, but on their underlying fundamentals, their long-term potential, and the essential services they provided, which he believed would be necessary for the country's eventual recovery and future growth.
Got it. So looking past the immediate chaos.
This is where his famous quote, frequently cited in the sources, comes into play. "You must invest when others are afraid. The best deals come in bad times."
Sounds simple, right? But actually doing it.
Exactly. Executing that principle when the world around you feels like it's collapsing requires immense courage, deep conviction in your analysis, and a truly long time horizon. It's a profound psychological challenge.
No kidding. And the crown jewel of this crisis investing approach, the example that really solidifies this principle, is his acquisition of Telmex, Mexico's national telephone company, during its privatization process in 1990.
Ah, yes, Telmex. At that time, Telmex was, by all accounts, a mess. The sources describe it as a classic state-owned enterprise. Bloated bureaucracy, laughably outdated infrastructure, notoriously inefficient service.
And burdened by significant political baggage. This sounds like a nightmare.
On the surface, it looked like a colossal headache, a relic from a bygone era.
But Slim looked past the current state and saw the fundamental opportunity. It held a near monopoly position in a country with massive unmet demand for telecommunications.
Okay.
He understood that telecom was an essential service, one that would only become more critical with technological advancements. He saw the potential to scale the business exponentially by modernizing its infrastructure.
So he led a group of investors who acquired Telmex. Crucially, he was able to buy it at a heavily discounted price, precisely because it was such a troubled asset and the privatization process was complex.
Right, the problems created the price opportunity again.
Then he didn't just buy the stock. He took control of the company and embarked on a massive multi-year project. He poured in billions of dollars of capital investment to replace the antiquated infrastructure with modern digital networks.
Billions. Wow.
He ruthlessly restructured the entire organization, cutting costs, improving efficiency, and modernizing operations. Real hands-on stuff.
The transformation was astonishing, apparently. Within roughly a decade, Telmex became the dominant force in Mexican telecommunications, at one point controlling up to 90% of the market.
90%.
Yeah. It turned into an incredibly powerful, cash-generating machine, effectively funding the expansion of his empire into other sectors and other countries. This wasn't a quick flip or a short-term trade. It was a complete internal overhaul and a decades-long build.
And what's critical to understand here is that this wasn't about some magic ability to perfectly time the market bottom.
Right, not about luck.
The sources emphasize that his success comes from trusting his rigorous analysis of underlying value and long-term potential, betting on the fundamental resilience of essential services, and then having the sheer patience to hold those investments, nurturing them through multiple economic cycles, market fluctuations, and periods of doubt.
He is willing to wait out volatility far longer than most investors or businesses can afford to. That patience is key.
This patient, value-oriented approach naturally draws comparisons to Warren Buffett's principles, identifying undervalued assets with a margin of safety and holding them for the long haul.
Sure, the value investing connection is clear.
However, a notable difference highlighted in the sources is that while Buffett typically acquires significant stakes in publicly traded companies, Slim has often pursued the outright acquisition of entire businesses, taking a direct, hands-on role in their operational turnaround and long-term strategic direction.
Okay, so more of an operator, less purely an investor in that sense, rolling up his sleeves.
Which requires a different kind of operational expertise and commitment, yeah. And The truly powerful outcome of this unwavering long-term patience is the sheer force of compounding.
Ah, the magic of compound.
By not being forced to sell during downturns, by reinvesting profits back into the businesses, his investments have been able to compound their value quietly, steadily, year after year for decades, largely out of the public eye.
It's telling, for instance, that during the highly speculative tech boom of 2021-2022 and the subsequent sharp correction, the sources indicate Slim remained largely unfazed.
Right, while everyone else was chasing unicorns.
He was focused elsewhere. While many investors were caught up in the frenzy for unprofitable tech startups or volatile assets, his focus remained anchored on tangible assets, essential infrastructure, and businesses designed not for a rapid exit, but to generate value and serve fundamental needs across multiple decades.
He has another quote that captures this ethos. Firm and patient optimism always yields its rewards.
But like you said earlier, it's not just a nice sentiment, it's the description of a system, a discipline that permeates his investing and his life.
It really is. It's having the conviction to see value others miss, the patience to let that value mature, and the discipline to ignore the short-term noise, no matter how loud it gets.
And that leads us perfectly into the absolute bedrock that supports this long-term mindset. His profound financial discipline, a habit that remarkably began not in a business school boardroom, but in his childhood home.
This is one of the most compelling aspects of his story, I think. When you hear about self-made billionaires, you often picture finance degrees, elite MBAs, or maybe early tech genius.
Right, the usual paths.
Slim's journey into finance began at age 11 with his father.
Age 11, that's incredible. His father, Julian Slim Haddad, was an immigrant who built his own business in Mexico City, a dry goods store, a truly self-made man.
And the most valuable inheritance he passed down to his children wasn't wealth, but a meticulous mindset, a deep sense of discipline, an insistence on precise record-keeping, and an embedded long-term perspective on money and value.
So it started really young. The sources detail this foundational practice. Starting at age 11, young Carlos was given an allowance, and his father helped him open his first investment account.
He bought stocks and government savings bonds even then.
But the crucial part was the daily ritual his father insisted upon, keeping a manual ledger. A handwritten notebook where Carlos had to meticulously track every single peso.
Every single one. Every bit of allowance received, every purchase made, every dividend payment, every gain, every loss, manually.
His father's guiding principle was starkly clear and incredibly impactful. You can't control what you don't measure.
Wow. That idea wasn't just a business lesson. It became a fundamental truth that Slim carried with him throughout his entire life.
Think about the depth of that practice. Even now, managing an empire worth tens of billions, Slim reportedly still believes in manual record-keeping for core financial analysis.
Still amazing.
And he taught his own children to follow this same practice. It's not about the manual process itself in the digital age, obviously, but it's about what it trained his mind to do.
Right. It forces you to personally engage with every number, every transaction, every investment. You feel it.
Exactly. This habit instilled a deep understanding of money as a dynamic system that requires constant attention, analysis, and consistency to grow. It cultivated financial literacy from a very early age. Not just theoretical knowledge, but practical, ingrained understanding.
He learned about return on capital, the mechanics of compound interest, how to read and interpret financial statements, not from a textbook, but by living and breathing the numbers of his own small portfolio every single day.
So he wasn't born into immense wealth, but he was given the tools and the discipline to systematically build it from scratch.
Yeah.
That's the key difference.
And this early, deeply ingrained discipline directly translates into how he manages his vast business empire today. The sources highlight that his companies are known for their rigorous cost controls.
Lean operations.
Very lean. He avoids overspending on unnecessary luxuries or vanity projects. He's cautious about overhiring or expanding recklessly just for the sake of showing top-line growth. The mantra is clear. Every peso must work hard. Every asset must generate tangible value.
This approach is evident in his holding company, Grupo Carso, which is known for operating with incredibly lean structures, minimal overhead, and maximum efficiency. That fundamental training in tracking and optimizing every single peso is deeply embedded in the operational DNA of his entire organization.
And this adherence to fundamental financial discipline is arguably the primary reason his businesses have been able to withstand the numerous severe economic storms that have hit Latin America over the past decades.
Yeah, they've seen a few. The 1982 debt crisis.
The 1994 peso devaluation, the 2008 global financial crisis, even the significant shock of the COVID-19 pandemic.
While other businesses collapsed under the weight of excessive debt, bloated cost structures, and overextension, Slim's companies, built on lean operations and strong financial reserves, were able to endure and even capitalize on opportunities that arose during those downturns.
It really underscores the power of what might seem like boring financial basics.
Yeah, the stuff people skip over. Track everything. Spend less than you earn. Reinvest wisely. Be patient.
These aren't complex strategies, they are fundamental disciplines that, when applied consistently over decades, create extraordinary resilience and growth.
And this section leaves us with a genuinely universal lesson, I think. One that applies regardless of your current financial situation. Slim's father's lesson, reinforced by Slim's own life, is potent. Master your money habits early, because if you can't manage $10, you won't manage $10 million.
That's powerful. It's about building the capacity, the understanding, and the discipline at every level. It starts small, but it builds a foundation for everything that follows.
Absolutely.
Yeah.
And flowing from that rigorous financial discipline, we encounter his almost legendary personal frugality. And as the sources make clear, this isn't just a peculiar personal preference. It's presented as a distinct, powerful competitive advantage.
The details are almost hard to reconcile with his net worth, like we mentioned. A person worth over $90 billion living in the same house he's owned for over 40 years.
It's mind-boggling. No sprawling estates, no massive portfolio of luxury homes dotted across the globe. No personal fleet of yachts or private jets used for leisure travel.
He wears simple, off-the-rack shirts, reportedly from Sears, one of the retail chains he owns. He eats dinner regularly at Sanborn's, the restaurants and department store chain he also owns. This level of personal simplicity is just so far removed from the public image of extreme wealth.
For Slim, the sources suggest, wealth is not about acquiring personal luxuries or displaying status. It's a tool, a resource to be deployed for building, for investment, for strategic advantage.
Not for personal gratification or exhibition.
Right. And he doesn't see this lifestyle as one of sacrifice or doing without. He frames it in terms of discipline and focus. The source quotes him stating, "Live below your means, not just to save money, but to sharpen your focus."
That distinction is crucial. The frugality isn't merely about accumulating capital, though that's obviously a benefit. It's about eliminating the distractions, the demands, and the mental clutter that come with managing an ostentatious lifestyle.
It frees up his time, his energy, and his capital to focus relentlessly on the core task of building and growing his businesses. Less noise.
And just like his personal financial discipline, this principle of frugality extends directly into the operations of his vast business empire. The sources highlight that his companies, from Grupo Carso to América Móvil, are run with an intense focus on efficiency and cost control.
Every expense scrutinized.
Yeah.
Unnecessary layers of management avoided. Marketing budgets often lean compared to competitors. He looks for ways to cut out middlemen and streamline operations. Just relentless efficiency.
The strategic why behind this business frugality is potent. Every single peso saved through operational efficiency, every expense avoided through careful management is a peso that is not taken out of the business.
Right.
It is a peso that can be reinvested. He sees this continuous internal reinvestment of saved capital as the fundamental engine driving the compounding growth and expansion of his empire.
And once again, this lean, efficient structure, built on the back of rigorous cost controls and a culture of frugality, is a major reason why his businesses have demonstrated such incredible resilience.
Yeah, when economic crises hit, companies with bloated cost structures, high overhead, and significant debt burdens often struggle to survive. Slim's companies, operating lean and with strong cash reserves built through cost control, are far better positioned to weather the storm.
And even capitalize on opportunities when competitors falter. They have the resources when others don't.
There's a deeper message here, too, about freedom and strategic edge. By not being beholden to public opinion or the need to maintain a flashy image, Slim gains a profound strategic advantage.
How so?
Well, he isn't pressured to make popular decisions or invest in fashionable trends just to satisfy external expectations. He can focus purely on underlying value and long-term strategy, even if those decisions are unconventional or initially unpopular. He doesn't care about the optics in the same way.
That makes sense. Less pressure to keep up appearances.
In a world where status is so often equated with visible consumption and luxury, his deliberate simplicity makes him a truly unique figure. He's not doing less. He's just prioritizing what truly matters and eliminating everything else.
As the sources summarize, frugality isn't a weakness, it's a competitive advantage. It provides capital, focus, and freedom.
Moving from that internal discipline and capital allocation, let's look at where and how he deploys those resources. He's known not just for buying low, but specifically for being a turnaround specialist, seeing potential where others see only problems.
This is a really fascinating application of his value investing principle. Most traditional value investors search for undervalued companies that are fundamentally sound, but temporarily out of favor. Slim, according to the sources, actively seeks out companies that are, well, to put it bluntly, broken.
Yeah, struggling. Businesses that are perhaps mismanaged, unloved by the market, undervalued, and in some cases, teetering on the brink of collapse. That level of distress is often his signal of potential opportunity.
The deep financial disarray of Mexico in the early 1980s wasn't just a period of low prices, it was a period of widespread corporate distress, creating what he saw as a fire sale
Hmm.
of fundamentally viable businesses that were simply being hammered by the macroeconomic environment.
Right. The worse the crisis became, the cheaper these potentially good companies got.
While international investors were exiting Mexico en masse and domestic businesses were struggling to stay afloat, Slim was quietly stepping in and acquiring a diverse portfolio of distressed assets.
The sources list companies he bought during this time. Cigatom, which was the largest cigarette company in Mexico. Sanborns, that iconic retail and restaurant chain. Seguros de Mexico, a major insurance company. And Aluminio Nacional, an aluminum manufacturer. These weren't shiny, high-growth companies. They were established businesses facing significant operational and financial challenges.
And crucially, his objective wasn't to acquire them cheaply, polish them up slightly, and then quickly sell them off for a profit. The quote from the sources makes his intention clear. "I don't buy companies to flip them. I buy them to fix them and make them strong."
Right. He was acquiring them not for what they were in their broken state, but for what he believed they could become after significant strategic and operational intervention. He saw the potential underneath the mess.
This involved a hands-on, often intensive restructuring process. He'd step in, analyze the business from the ground up, implement rigorous cost-cutting measures, drawing on his own principles of frugality and efficiency.
Replace or revamp management teams, renegotiate crippling debt burdens, and invest strategically to modernize operations and improve efficiency.
The initial focus was always on restoring fundamental profitability and reliable cash flow, stabilizing the business first, and then positioning it for long-term growth and scalability. Get the basics right first.
And Telmex, once again, serves as the prime example of this turnaround mentality on a massive scale. He took on a government-owned utility that was inefficient, outdated, and politically complex.
A huge risk by conventional standards. But he saw the underlying essential service and the leverage possible with technology.
He acquired it at a deep discount precisely because it was so troubled, then applied his turnaround playbook, massive investment in infrastructure, ruthless operational restructuring to transform it into a dominant modern entity.
His turnaround investments weren't limited to Mexico either, were they?
No. The sources mention his investment in the New York Times during its significant financial challenges in 2008.
Right, I remember that people were skeptical.
Very skeptical. Many observers were dismissive of him buying into a struggling traditional print media company in the digital age. But he held steady, provided crucial financing, and his patience paid off as the Times successfully navigated its digital transition and saw significant growth in digital subscriptions.
Another case of seeing underlying value in a distressed asset and having the patience to wait for the turnaround.
The core insight here is that while the market often overreacts to short-term problems, creating significant undervaluation, Slim has the capacity and the conviction to look beyond the temporary distress.
He seeks out businesses with fixable problems, founded on essential demand or core functionality, and then applies his operational expertise and, critically, relentless patience to restore their health and unlock their long-term potential.
As he often emphasizes, wealth is built quietly, not through drama, but through value. This reflects his preference for the steady, often behind-the-scenes work of fixing and improving businesses over seeking dramatic, quick exits or making flashy, speculative deals.
Okay, so building on the strength of these turnaround businesses, Slim hasn't just focused on individual companies. He's built an entire ecosystem through strategic diversification. And this isn't just random scattering of assets. It's a calculated principle designed to create a multi-industry empire built for resilience against economic storms.
Yeah, it's taking the classic adage, never put all your eggs in one basket, to an unprecedented level of strategic integration. He's built across sectors that provide different, often essential services and that respond differently to economic cycles.
So the goal is to have components that can provide stability or even thrive when other parts of the economy are struggling.
Like a buffer.
Exactly. Let's look at the primary strategic components highlighted in the sources. First, telecommunications, anchored by America Mobile. This is an absolute behemoth, one of the largest telecom companies globally.
Huge footprint, operating across 17 countries in Latin America with a subscriber base exceeding 280 million. That kind of scale provides a massive, incredibly stable stream of cash flow, which is a critical anchor, especially during periods of economic contraction when discretionary spending tightens.
Right. People might cut back on luxuries, but they still need their phones and internet connection. It's almost a utility now.
Then there's finance, primarily through Grupo Financiero in Bursa. This sector acts as a crucial shield against market volatility. Services like banking, insurance, and wealth management are essential utilities that continue to operate, albeit with variations, even during recessions or market downturns.
Provides another layer of stability and alternative revenue streams.
Okay. His interests in retail and restaurants, notably through Sanborns in Mexico, represent another stable component. Described as a national institution, Sanborns benefits from consistent foot traffic and deep customer loyalty.
Providing a steady base of revenue, less sensitive to global market fluctuations. It's a fixture.
Then industrial and infrastructure, housed primarily within Grupo Carso, position him to benefit from long-term government spending and modernization projects, particularly in developing economies across the region. These are often multi-year contracts that provide predictable revenue.
And significantly, the sources highlight major new investments in energy in 2025. This includes over $2 billion invested alongside Mexico's state-owned oil company Pemex in major oil and gas fields like Ixachi, Lacac, and Zama.
Plus the acquisition of Petrobol for $530 million. These are substantial bets on natural gas and domestic energy production.
These energy investments are framed in the sources as timely, calculated moves. They're tied directly to national development goals for energy independence and security, and they represent a belief in the long-term utility and importance of natural gas, particularly in a world navigating the complexities and instabilities of energy transition.
So it's an investment in a fundamental essential resource at a strategic national level, not just a commodity play.
Exactly. Taken together, these diverse industries function as a kind of ecosystem, as described in the sources. They have different sensitivities to interest rates, consumer spending, and global economic conditions.
So when manufacturing or retail might slow down, telecom or finance might remain stable or even grow. They balance each other out.
This inherent diversification and the essential nature of his businesses protect the entire structure.
It means he doesn't need to spend his time trying to predict or time market cycles perfectly. He's built a portfolio of businesses designed to simply outlast them.
By controlling companies that provide essential services in infrastructure, connectivity, finance, energy, basic goods, his empire remains relevant and stable, regardless of short-term economic fluctuations, political shifts, or changing fads.
The outcome of this strategic diversification is not just higher revenue, but incredible resilience. It means he rarely finds himself in a position where he has to sell assets at unfavorable times.
As he puts it, encapsulating this philosophy, you don't need to guess the next boom. You need to build things that survive the bust. His empire is fundamentally built on survival and endurance.
And speaking of building things quietly and enduring, let's address his almost defiant avoidance of the spotlight. In a world where celebrity billionaires are commonplace, Carlos Slim maintains a remarkably low profile.
It's a stark contrast, isn't it? You don't see him engaging in social media debates, issuing pronouncements on global events, or seeking headlines for his personal activities or purchases. He's just not out there like that.
The sources point to a guiding rule for this behavior. Focus on what matters, ignore what doesn't.
Simple but effective.
And this isn't just a personal preference, it's a strategic filter applied to his business and investment decisions as well. While others are chasing whatever asset class is currently generating the most buzz and media attention, whether it was internet stocks in the late 90s, real estate bubbles, or recent phenomena like crypto or NFTs or SPACs,
Slim consistently remains anchored in fundamentals. He invests only in businesses he deeply understands, and those are typically rooted in essential needs and tangible assets. Things you can, touch and feel.
He bets on the enduring, fundamental needs that will exist regardless of the latest technological shift or market fad. Communication infrastructure, energy, financial services, basic retail, education.
He understands that these are the pillars of any functioning society, and their demand persists across generations and economic cycles. They're not going away.
He's completely comfortable with being perceived as old-fashioned or even boring by those focused on the trendiest sectors. He embraces it because he knows that what is often considered boring, reliable infrastructure, essential services, is precisely what endures and provides long-term value.
As he's quoted, all times are good times for those who know how to work and have the tools to do so. It's about having the foundational capacity to operate effectively, regardless of the external environment.
There's a quiet power in this invisible influence he wields. He controls essential services that impact the daily lives of millions across Latin America, their mobile phones, their internet, their banking, even the energy they use, without seeking constant public adulation or recognition.
His companies are deeply embedded in the fabric of daily life and national economies, shaping the future through tangible investments like the recent AI pledge for Mexico's digital infrastructure, all happening largely without him occupying the front page of magazines.
This deliberate avoidance of fame and ego-driven pursuits provides a critical advantage: clarity.
Clarity, how so?
He isn't distracted by the need for external validation, public approval, or maintaining a particular image. This freedom allows him to make purely rational, deliberate, long-term decisions based solely on the underlying value and strategic potential of an investment or business, insulated from the pressures of public opinion or the need to generate buzz.
Okay. Less noise, better decisions. Makes sense.
Even his extensive philanthropic efforts, channeled primarily through the Carlos Slim Foundation, are notably low-profile despite donating billions to critical areas like education, healthcare, and poverty alleviation across Latin America.
Billions donated quietly. The principle seems to be, you don't need to announce everything you do it because it matters. The focus is on the impact, not the applause.
Ultimately, the sources suggest his true power lies not in trying to be famous or constantly seeking influence through pronouncements, but in simply being profoundly influential through the sheer scale, strategic importance, and fundamental nature of the businesses he controls.
His influence is quiet, pervasive, and deeply embedded in the region's infrastructure. Under the radar, but everywhere.
This brings us to a particularly insightful aspect of his philosophy, which is how he approaches his legacy, specifically how he's prepared his children. It's not just about transferring wealth, it's fundamentally about passing down a mindset and raising a new generation of builders, not simply heirs.
This is quite different from the stereotypical narrative of dynastic wealth, isn't it? From a young age, his 6 children were not just destined to inherit. They were systematically trained to understand, to manage, and crucially, to earn the right to lead components of the family empire.
Yeah, the sources detail how they started at the bottom, learning the nuts and bolts of the businesses, working in areas like accounting, operations, finance, and legal departments. No automatic executive titles or shortcuts to the top.
His philosophy is direct. My children are prepared to work, not just to inherit. This echoes the discipline his own father instilled in him and reflects a deep belief that earned success is more sustainable and creates stronger leaders than inherited privilege.
And he passed down that core discipline he learned as a child, that habit of meticulous financial tracking. The sources confirm that his children were also required to manually log their expenses, analyze investments, and were taught to approach potential opportunities with skepticism and rigorous analysis, not just enthusiasm.
So it wasn't just about giving them financial statements. It was about embedding that fundamental discipline, fostering independent judgment, and demanding a deep understanding of value. Same principles, passed down.
He also cultivated a culture of open debate within the family businesses. The sources mention that he actively encourages his children to question his decisions, even to challenge him directly in meetings.
Really? That's interesting. He's not looking for sycophants or clones. He wants leaders who can think critically, identify potential flaws, and ultimately build stronger, more resilient enterprises. He welcomes the intellectual challenge.
Within the vast structure of the empire, each of his children now holds significant, distinct leadership roles. They manage different key sectors: telecom, retail, infrastructure, finance, the philanthropic foundation.
So they have their own teams, their own responsibilities, and are held accountable for their outcomes. Real roles, real stakes.
As he states, if they fail, they learn. If they succeed, they grow. But they must earn both outcomes. It's a philosophy centered on responsibility, learning through direct experience, and the understanding that success is earned, not given.
The emphasis on humility and hard work is deeply ingrained in the next generation as well. The sources note their relatively modest personal lives, their quiet presence compared to other wealthy families, and the expectation that they work with the same intensity and discipline as any other senior executive in the company.
There's a deliberate effort to avoid a sense of entitlement.
Because, in Slim's view, wealth itself is a significant responsibility. He believes that a large fortune, if not managed with constant care, rigorous discipline, and a clear sense of purpose, will inevitably dissipate over time. It requires continuous effort to maintain and grow.
So his ultimate investment isn't just in physical assets or companies, but in the human capital of his family, ensuring they have the skills, the discipline, and the mindset to steward and grow the legacy.
His quote sums it up powerfully. "I don't want to leave a fortune. I want to leave behind people who know how to build one." That's a vision of legacy focused on capability and continuity, not just cash.
Absolutely. Finally, let's turn to what might seem like the most modern, perhaps even surprising aspect of Slim's recent activity: his calculated moves to embrace the future. Despite his old-school principles and seemingly traditional approach, in 2025, he's making significant investments in cutting-edge areas like AI, 5G, and energy independence.
These might initially look like a departure from his typical investments in distressed industrial assets or established utilities. But when you examine the details provided in the sources, they actually fit perfectly within his long-standing framework of investing in fundamental infrastructure and long-term value.
How so? Let's take the significant commitment of $10 billion USD towards developing Mexico's AI infrastructure. This isn't about speculative bets on trendy AI startups.
Right. The stated purpose is explicitly linked to a core societal need: closing the digital divide in Latin America. It's about access and development.
The goals are concrete and infrastructure-focused: building robust data centers capable of supporting AI processing at scale, training a large workforce of AI engineers within Mexico, and creating national platforms leveraging AI for essential services like improving logistics, enhancing healthcare delivery, and expanding educational access.
So he sees AI not as a fleeting trend, but as foundational future infrastructure for national development and competitiveness.
Exactly. He's quoted emphasizing the urgency. We can't be left behind. If we miss AI, we lose an entire century. And importantly, he's focusing on integrating AI to enhance the efficiency and scale of his existing businesses, not just chasing novel applications, making his current stuff better.
Then there's the massive rollout of 5G technology by América Móvil across its extensive footprint of 17 countries. With a planned capital expenditure exceeding $6.7 billion for 2025, this represents one of the largest 5G investment programs in the Southern Hemisphere.
But again, the strategy is deliberate and patient. The focus isn't just on being first to market in a few major cities for bragging rights.
No, the plan involved prioritizing underserved areas, optimizing infrastructure sharing to reduce costs and expand reach efficiently, and building long-term subscriber value by providing reliable connectivity everywhere, rather than just chasing short-term speed metrics in select spots.
It's about building a ubiquitous, profitable network over the long haul, not just being the fastest in a limited area. Breadth over just peak speed.
And his recent major investments in the energy sector are particularly telling, especially in the context of global energy transitions. While there's widespread focus on renewables, Slim is making substantial commitments to natural gas and domestic oil production.
The $2 billion partnership with Pemex in those key fields, Ixachi, Lacac, Zama, and the acquisition of Petrobel for over $500 million are calculated moves.
These investments are timed strategically and are deeply tied to Mexico's national development goals for energy security and self-reliance. They reflect a belief in the continued long-term utility and importance of natural gas as a reliable energy source, particularly as the global energy transition faces complexities and potential instabilities.
It's an investment in a fundamental, essential resource for national resilience, thinking about stability.
His approach to these seemingly cutting-edge trends can be summarized by a few clear rules derived from the sources. Only enter when the fundamental need and technological readiness are aligned.
Okay.
Only scale when the implementation can be efficient and cost-effective.
Right, the discipline again.
And only stay committed if it builds demonstrable long-term value, not just short-term hype.
So he's not investing in technology for technology's sake or chasing the latest fad. He's investing in what he sees as fundamental solutions to real-world problems that require infrastructure and scale. Closing the digital divide, providing reliable connectivity, ensuring energy security, and self-reliance.
As he aptly puts it, the future belongs to those who prepare, not those who predict. And his preparation, even in these advanced fields, is already in motion, built upon the same bedrock principles of value, discipline, and long-term vision that have guided him for decades.
So let's bring all of these threads together and maybe distill the core lessons and takeaways from this deep dive into Carlos Slim's quiet empire.
Yeah, let's summarize. His extraordinary wealth was not the result of a single lucky break, mastering the art of generating headlines, or being the most fashionable or trend-following investor.
Not at all.
The sources consistently show it was built by mastering fundamental habits, disciplines, and principles that are often overlooked or simply too challenging for most people to stick with consistently over the long term.
It's a fortune built on a foundation of relentless discipline, unwavering patience, and an absolute focus on intrinsic value.
The core principles we've explored, simple in concept but powerful in execution, offer a blueprint that transcends the scale of his wealth.
Okay, let's tick them off. 1. Buy value, hold long term. This means avoiding hype, investing when others are fearful, and possessing the deep patience to let investments mature over years, even decades.
2. Master personal finance early. Develop rigorous tracking habits and financial literacy from a young age, understanding that managing small amounts effectively is the foundation for managing large amounts. That 10 vs. $10 million idea.
3. Live well below your means. See frugality not as sacrifice, but as a strategic advantage that provides capital, focus, and freedom from external pressure and the need to impress.
4. Turn crisis into opportunity. Prepare yourself and your businesses to withstand downturns, recognizing that crises often depress prices of valuable assets, creating opportunities for those with capital and courage. Be ready.
5. Diversify with purpose. Build an ecosystem of businesses in essential sectors designed for inherent resilience across different economic cycles rather than just scattering investments randomly. Make it integrated.
6. Avoid fame. Build substance. Prioritize focusing on the fundamental value of businesses and long-term strategy over seeking public recognition or chasing ventures driven by ego or popularity. Stay focused.
7. Raise builders, not just heirs. Focus on passing down mindset, discipline, and the expectation that success must be earned through hard work and competence, preparing the next generation to steward and grow the legacy. Invest in people.
And 8. Embrace the future, but on your terms. Invest in essential, long-term value and infrastructure, even in cutting-edge fields like AI and 5G, applying the same principles of efficiency, necessity, and strategic purpose. Future-proof based on fundamentals.
The quiet blueprint for wealth, stability, and influence is remarkably consistent throughout his life story. It's built quietly, carefully, relentlessly.
It shows that discipline, often seen as boring, is the true long-term winner.
Yeah.
And that you absolutely do not need to be loud, chase trends, or seek fame to be profoundly powerful, relevant, and truly wealthy in a way that endures.
Carlos Slim's life and strategic approach offer a compelling counter-narrative to many of the stories we hear about wealth creation today. It's quite different. And that leaves us with a closing thought for you, the listener, to consider. Slim's core principles, rigorous tracking, relentless patience, quiet focus, buying when others are afraid, seem almost like relics from a different era in some ways.
Yeah, very old-school virtues.
Yet they've enabled him to build one of the largest and most resilient fortunes on Earth. What if you were to deliberately adopt and apply just one of these seemingly old-fashioned principles in your own life or work?
Just one. For instance, what if you committed to meticulously tracking your time or finances for a month? Or chose to apply relentless patience to a single long-term goal, ignoring short-term distractions?
Or perhaps made a conscious choice to prioritize substance over seeking external validation in one area. Just pick one and see.
How might applying even one of those boring but powerful habits shift your perspective and trajectory on building value, resilience, or lasting success in your own sphere? That's worth pausing to reflect on, I think.
It really is. Thank you for joining us for this deep dive into the sources provided about Carlos Slim's quiet empire.
Yeah, there are profound lessons to be found when we look beyond the headlines and examine the fundamental how and why behind extraordinary, enduring success, especially when it operates outside the conventional playbook.
We hope this deep dive has offered you some powerful new insights and perhaps some inspiration for applying timeless principles in a modern world.
Hopefully some useful takeaways there.
Until next time, keep digging deep, build quietly, and let value speak for itself.